Hi, this is Kirk with Forex Strategy Secrets, and what we're going to be doing today is talking about 15 secrets to become a consistent trader, but to do that quickly, not to take forever, but you have to do your part also. And everything I'm going to show you today, it can be learned quickly. So we can get up to speed quickly, and we show you material that you can learn and become proficient in how to trade. If you would like to improve your trading performance, then this webinar may be for you, because we're going to show you some things that will make a big difference if you'll use them. You have to practice them. It's like learning to play the piano. Some people like to play the piano, but they just don't like to practice to learn to play the piano. This one, you're going to have to practice a little bit if you want to become a successful trader. You first of all need knowledge, and correct knowledge. We're going to give you that correct knowledge. We've proved over the years this is good knowledge. Tools. You need tools, indicators. Another tool is to collaborate with co-traders. That's a tool that really helps you find trades and discuss ways and directions in the market. Then get experience. And this is what we're going to be talking about heavily today. A lot of experience in a short period of time. First of all, to be successful in the market, you need to make pips daily, keep those pips, and then be able to do it over and over again. Just repeat what you do. So you need to be able to learn how to do something and have some tools so that you can do it the same way every time. Now, so we're going to show you a list of 15 secrets. Now, the reason we call them secrets is because they're right in front of you, and most people miss them or don't know how to find them. The secrets can be mastered, and they can be mastered by you. The first is to recognize a trend. Many people say, well, I can recognize a trend, but when I recognize it, it's all over. It's finished. Well, that's it's half over anyway. At least many people, that's what they see. We're going to show you some things, how to recognize a trend early. You're going to learn how to recognize a trend when it's going to be changing directions. We'll show you what it looks like when things change directions. How to identify high probability trades. How and when to exit trades. Learn which time frames that you need to know how to trade. That's best for you. And how to trade more than one or two currency pairs. Learn how to trade the market when the highest probability of good moves are available. Learn how to trade while working a full-time job or having a busy schedule. Learn how to recognize chart patterns. Learn how to control your emotions. Learn how to focus and be consistent. These are all secrets. Learn how to stop allowing your losing trades to run too far, but allowing your winning trades to run to completion, run to a profit target, or run to let a trailing stop take it out. Learn how to keep proper journals and records. They don't have to be elaborate, but you need to keep some track of records so you know where you've been, and then you can know where you want to go and how to get there. And we're going to show you how to get 1 year experience in 30 days. If you do a little more effort, you can even get 1 year experience in less than 30 days. Not getting a year to get 1 year experience and then repeating that improper experience for another 5 years if you even were able to stay around that long doing things incorrectly. Now we're going to go to charts, and I'm going to show you what we've been talking about. I have a picture. This is our jump start. This is our free strategy, and if you don't know how to get this, at the end we'll give you a link so you can get in touch with Michael so you know how to get this. This is one of the tools we show you how to use simulated trading. That's how you figure out how to get a lot of experience in a short period of time. I'm going to show you what you'll be looking for. See where this indicator crosses above or below the zero line. And it does above and below over here. It did go above, but I'll show you when we get there. You'll know that this is where you would want to trade on that one. And you want to trade, I need to put that, so delete that. And you put it up in the chart area. Okay, those are some moves right there. And we could keep on going over here. This is pretty straightforward. I can illustrate all the principles, but they'll apply in many different things. So what you do is, this is a 1 hour chart. Now, what I'm going to do is go to the 15-minute chart, and we're going to look right here at this white line on the left. Now, was it above the zero line? were the moving averages, we call them hot lines, were they starting to open up right in that area? Was there a swing high right here that it was passing? So right in here, we knew the direction. Now we know the entry point. Any place in here, even though it did come back and it took a while. This is a 50-minute chart, so it wouldn't take more than a few hours before you would really been off making pips in that direction. Go back to the 1 hour. What was one signal that told us the direction of a trend? It may not be that we're on. This is a 1 hour trend. We're not talking about the day trend. You could use the same principle, go to a day chart, and this is one of the first heads up at the beginning, or potential beginning of a trend. Oh, it tried to do a couple of moves here, but it was just going sideways. But you can tell when it breaks out. When it breaks out about that point, and then there's a good move happening. Okay, now let's look at this other spot right here. We'll move the chart over to, so the anchor is right below that vertical line. Go to the 15-minute chart. Well, is this one below? Is it opened up? Yes, there's some space in here that says there's potential for a good trade in there. Does it take a little while to get going? Yes, it does. And then on this 15-minute chart, from where I started up here down to right here where you'd be getting out, that's 100 pips on a 15-minute chart. But you were finding that on a 1 hour. Okay, now what we're using for an exit signal is, there are many others, but this is the first one you may want to look for in your simulated trading. See how we call these hot lines? When it crosses back up, and you see this is called a male, that's what we call it. It's starting to go back up. That would give you a signal that maybe that's a place to exit that trade. Okay, now we're not going to go through all of these, but that's what you look for. You could go to this one, same thing would happen. Go to this one, same thing would happen. You have some really nice trades. Even from right there down to here was 70 pips. So how would you simulate trade this? You get your anchor, and in our simulated trading we show you how to find the anchor, so I don't want to waste your time right here to do that. And then we're going to move this chart over to this area. Right here, see, we know because this crossed above the 0 line, that would be an area we would want to consider going long. Now let's go to the 15-minute chart. Okay, we probably would have been in a little bit sooner than this, but for sure right up in here. So I'm going to hit the F12 key, and it moves it across one time frame at a time. So right here, when it goes above these swing highs, right in there someplace would be a good spot to enter a trade. So as you're doing this, you put a line there. Say that's where I entered the trade. Now what are we looking for? An exit? We're looking for the hot lines to cross back the other direction. Now we're still on this 15-minute chart, and so this may be your exit signal right here. That was only 13, 15 pips. Depends on where you had that set. Now let's go across a little bit more. And was there another entry spot? Yes. Right there would be another entry spot, because we know that we're supposed to be going long right here. And so right here's where it first crossed above. And you can either take it down in here or wait until it passes right here above that swing high. And when it passes above the swing high, then we take the trade. Now what are we looking for at the exit? Where the hot lines cross again. See, they looked like they were going to cross, but they didn't. Right here is where they crossed. So you would exit the trade right up in here. So from the second entry, you're looking at about 60 to 70 pips. That's how you can get a lot of experience in a short period of time. You find your entries, and then you go to a smaller time frame to trade it. Now right here, I'm going to go back to the 1 hour. We're just looking at these first two lines. Why am I doing this? If you had managed this on a 1 hour, this first trade you never would have gotten out of, and you'd still be in it over 100 pips here. See, the hot lines didn't even come back. Right there, they crossed. So from the time you received an entry signal here until it crossed over here, you're 227 pips. This is on a 1 hour chart. So you can find the direction on the 1 hour, time your entry on the smaller 15-minute, maybe 30-minute, and then you can manage it on a 30 or 1 hour. That's experience. You have to play by ear as to what you want to do there. That gives you good signals to get in, get out, and knowing what to do. So we've talked about how to find trends early, and we'll go through some other things to even show you more. And we've talked about exiting trades. Now, we talked about, there was another thing that said, don't let your negative trades run too long. Well, you would have had a stop right in here. So your stop would have been out, in this case, about 100 pips. Let's go back to that 15-minute chart. If you'd entered right up in here, your stop would have been 87, or you could have even put it there for 50. Now, if that is too big of, you just can't comprehend losing 50 pips, well, cut your lot size down. So if you were normally trading one mini lot, and you say, that's $50 if I lose that, well, what if you can stand to lose $12? Then cut your lot to 2.5. You're still going to lose the 50 pips, but you've only lost $12 instead of $50. And I've rounded a little bit, but you get the concept. Make it such that it's not going to cause you all that emotion. That's how you keep emotion out of a trade, is by knowing how to adjust your lot size. Okay, now we're going to take the same scenario. You can go back to the 1 hour so you can see what we've done here. Let's just look what it did toward the end. So this is relatively fresh. You see that there was some signals here to buy and to buy here. This is the news announcement, and then possibly to start selling over here. Okay, so we're going to take this anchor and move it right over to that area. Now we're going to go add one indicator. So what we've done is added this one indicator, and we went right here was where we first started going. I'm going to put a vertical line right there. And we're going to put a vertical line right there, going short, going short, going short. That's the same place we had the other lines. So what we have here, see how easy that is now? You have three things. You have this indicator that's above the zero line. You have these moving averages that stayed open the whole time. You have a second momentum indicator that's telling you that yes, that was a trade that you should stay in. There was no reason to get out of that trade. Let's look at that on a 15-minute time frame. So right over here, we talked about possibly entering right in here, but for sure you could be getting in right up here or right there. Then we said, well, if you got out where you saw the hot lines cross, well, there's 70 pips. Well, can you get back in? Well, I wouldn't trade this so much, but right here it says get back in, and you'd be out there for 60. So let me mark this area right there as to where it really finally said it was going to change directions, and look at the 1 hour. So you can see where the 1 hour would have kept you in clear up into this area, and you had a bigger trade from here up to this area over 200 pips instead of in and out, in and out. Just a couple of ways of how to manage trades, how to know when to exit a trade. Okay, the second exit signal I'm going to share with you is on this 1 hour, when the hot line cross was the first. The second one was when this indicator changes colors. So those are two right straightforward exit signals that you can see. Now 1 hour you would have had to wait a while, and there's ways you can manage this while you're working a full-time job. But let's go on with what we're talking about here, as far as we're talking about getting into trades. Okay, so we're going to put that right there. Now we're going to go to, this is our nth degree system right here. Now what last one we had was the beginning portion of this course. We call it launch pad, kind of get you started. And this is the nth degree. It takes you as far as you want to go in trading with this system right here. We're going to show you some enhancements to this that even make it such that you're really in tune with the market. But right here, we want to share with you the same entry point. Okay, look what this additional indicator is doing here. We added these little arrows here called fractals, and they're marking support and resistance areas. Okay, I want to use two words that I want you to become familiar with. You probably already know them. If you don't, then you need to learn them today. The market moves in impulsive moves or corrective moves. Okay, this is an impulsive move. This is an impulsive move. This is a corrective move. Impulsive, corrective, impulsive. What comes after impulsive? A corrective. Now this actually changed directions and started going the other direction. There's a pattern here. And I'll show you in the next step how we can read and look at those patterns and know some profit targets and where to how to trade this whole section here. See where these double lines are here? That was a weekend. And with this particular broker, they open a couple hours before the new day bar forms, and so that's why that's a smaller time frame. But this was Monday, Tuesday, Wednesday of last week. And so you would have into Tuesday, it started giving you a cycle, Tuesday, then again Wednesday, then again Thursday. So each day there was a nice move on this currency pair. Now, here's another little thing I want to introduce to you before we even go on to that. I'm going to come back to the Euro Aussie, but I'm going to scroll through a couple of Euro pairs and show you that very often they all have a similar pattern. Well, they went the same direction, didn't have the same pattern, but it did start going down. It was going up here and then started going down over here. That one didn't do it as much, but you still see that same pattern going on there. This was choppier, harder to read, so that wouldn't be close. But here's another one, hit up. This one is a little closer to being the same. So, how do you start making more pips with less effort? Well, if you start seeing one Euro pair moving, why not look at some of the others? Remember this big up move on this Monday? Then we had several days that went down. There were at least two pairs. Let's do the euro dollar also. It had an up move, down, down, a little bit of a down. Same day you could have taken pips out of each of these going in the same directions. So that's how you can learn to trade more than one currency pair. Find one that's moving and then trade others with the same currency in them. The euro must have been moving, so you could look at all the other euros. The same goes true with the pound, New Zealand, the US, the Aussie, the Swiss, the yen. Find which pair is moving and then trade that. Okay, so we talked about impulsive, corrective moves. You see how powerful this is? Look at the bottom here. We talked about impulsive, corrective. What if you had missed this whole area here because you weren't quite sure that there was making a retracement? That's okay. This one for sure, these two should have been areas that you could easily trade. This indicator is below the zero line, so trade in the direction, trade short. When it was above the zero line, you're trading long. See how easy that is? We're finding trends early into the move. Many people say, well, here was the trend, so they can possibly trade this little bit down here. Well, trade that also, but why not trade this one for sure and maybe this one? And so that's how you can trade more currency pairs, more moves, find the trend earlier. And I want to see if there's something that I can see quickly that's going to show you when the trend is coming to an end or going to change. This bar right here is further away from the zero line than this one. So that is moving back towards the zero line. So that's called convergence, converging. The price was coming down. The momentum was going up. Those two lines are converging. That, if you can recognize that, we call it CDC. It's convergence, divergence, or congruence. If you can recognize that, then you can tell when the market is going to be changing directions. That's one thing that we stress a lot. We have a lot of videos on that, trying to get people exposed to that and become familiar with it so they can really be in tune with the market by knowing really what's the market doing. This indicator's telling you a lot of what it's doing. Between the combination of the indicator up here and the indicator down here, you can see impulsive and corrective moves take place. What happens after an impulse move? A corrective move. What happens after a corrective move? An impulsive move or a change. So you see all kinds of patterns here. But recognize this pattern, recognize this pattern, where the market starts changing direction. Even this is a pattern. Once you learn to recognize them, and our course material goes through that a lot, trying to help you to understand patterns. Okay, I'm going to go on to an additional set of tools. This is nth degree. We have students that have used all of these secrets and they've become very successful, making hundreds of pips a week, 400 or 500 pips a week. Not just one person, but a whole bunch making 4 or 5. A few are making 7 or 8 on a regular basis, that pips per week. Others are making have win-loss ratios of over 90%. Many of those making the hundreds, 500-600 pips, they have win-loss ratios of over 80%, 75 to 80, making all those pips. And there are some that are making about the same number of pips with maybe a week, maybe a month or two, and not having a loss. One of the traders that had a high win-loss ratio was asked, "When's the last time you lost a trade?" The answer was 2 months before this question was asked. So for 60 days, they hadn't lost a trade. Well, in the big scheme of things, that's really a high percentage of win-loss ratio, and they make a lot of pips too, and they're taking trades. So it's not like they're just waiting around, but we showed you how to time some of these trades, and that's the system that they're using. That's what they're doing. What would it be like if you could talk to those traders? Well, come to our trading rooms. You can actually talk to them. You can ask them questions and rub shoulders with people who are doing it and being able to talk to them. Okay, now I'm going to show you the next step. This is our nth degree advanced. If you add all together, then the whole package is the nth degree supreme. Okay, you see some shadows here? This is just a pivot points. And this is what it looked like yesterday. The day's total average true range was right there. This is what the current range is for the day, and you have pivot points. This is blue if it's not behind the daily range, but that's the mid pivot right there. And you have the R1, R2s, and the S1, S2. That's resistance and support up above or below. Now, there are signals to help you determine whether you're on the right side of this or not. There's a saddle sell. That tells you you should be trading in this direction for over 100 pips on this 1 hour chart. That was just told you that because if you know what a saddle buy, saddle sell is, you know which side of the pivot line you're on, there's a high probability that that's going to give you some pips. You don't know how many, but you know that it's going to be some. Notice what it did. It touched it right here at the very beginning of the day, but look where it ended. Right at this other mid-pivot right here, it stopped very close and tested it. It came back up, and it's working along this pivot level. So the pivots are really important as to where the market gravitates to these pivot levels. And many times you will find fractals there. We talked about fractals. That gives you the support and resistance levels. When you see pivots and fractals at the same place, that's an important area the market's going to have to move through, gravitate towards, or move away from. Okay, we haven't even brought this into play. This is drawing the Fibonacci. This is part of the nth degree advanced. How do you know that's the place you should draw it? And the course material talks about it and tells you, but swing low to swing high, but this indicator, it's above, it's below. That also gives you an indication of what it's going to do. So this was an impulsive move. Now it's doing a corrective move. Notice right here, it came back to that 50% fib level. Oh, it tried to touch the one higher, but that's where it was really bouncing off, was that one. So that's okay. So that tells you some things. That tells you where you may want to be trade. You know the direction you want to be trading, but where would you take your set your take profit? We can know that right in here is a profit target, and we know that at the time we drew this, when it hadn't even retraced. When it started coming back down, we knew that's a profit target that we may want to set some take profit on. How about that? Knowing, have you ever wondered why people say, well, I have a profit target here and here and here? Well, that's how they can figure it out. There's another profit target down here as well. So there's a couple of different profit targets down here. One to trade this one and one to trade this one. I'm going to do a different thing with the fibs now. I'm going to go this swing high to this swing low. This would be another profit target. That's the same place that the other one said. You just have to know how to read the numbers to set your profit targets. And so you can know where you're wanting to trade, how you're wanting to trade, and what you're going to do. Did you see these moving averages? They're telling you some things also. They're saying that if the price is on that side of those lines, then that's the direction you should be trading. So these are safe trades right in here. You have profit targets, safe trades. That's a few of the tools. You notice the little white circles, green circles, and red circles? Well, if you know how to use those, it will tell you which direction to trade and when things are going to be changing. And so you have all kinds of tools. What do these additional tools do for you? They help you to trade like the institutional traders trade. They use pivots, fibs, moving averages. That's how they know how to trade. That's why they know the targets are taking place. And once you learn that, you can be in tune with the market. Now you have all these entry signals we've talked about before. And you add this targeting moves and being in tune with the way the institutional traders are trading. Well, wow, there's no reason why you couldn't be successful if you put in the effort and learn how to trade before you throw money at it and lose all your money. We're suggesting that maybe in 45 to 60 days, you could actually start trading live money. That doesn't mean you put $100,000 into an account and start trading 10 standard lots at a time. What we're talking about is put $1,000 or $2,000 into an account and trading the smallest lot size your broker will allow. Some it's a penny and some it's a dime, but trade that smallest increment. Learn how to trade. Throw knowledge at it, not money. Once you have the knowledge, then you can grow the money. The money will start coming once you have the knowledge. If you're trying to throw dollars at it, you lose your emotions and you start losing your dollars. You lose control of the emotions. So we've shared a lot of information with you. If you grasp half, not even half, if you grasp 10% of what we shared with you today, you'll be well ahead of, I would say, over 75% of the traders. If you grasp 20% of what we talked about, you're over 90% ahead of most traders in the industry, the retail traders. Okay, now we have gone to the charts, and now we're going to show you what we were talking about. And here's just a list of what we covered. I should have covered most of these orange boxes here. How to recognize a trend. I even did this one. How to recognize when a trend is changing. How to find high probability trades. Do you remember that? Where we found it on the 1 hour and then we timed it on the smaller time frame. How and when to exit trades. We gave you 2 exit signals. How to learn how to trade while working a full-time job. Okay, I didn't talk about that much. Here's 2 things. 1, use larger time frames. Second, learn to use all the indicators and learn the patterns so you're trading the way the institutional traders trade and when they trade. Learn how to recognize chart patterns. We showed you some chart patterns. We actually even talked about how to control your emotions. That's by being in tune with what the institutional traders are talking about. We talked a little bit about, we didn't say it, but being focused and being consistent. If you focus on what you know how to do and you do the same thing over time, you're going to be able to be more consistent and be more profitable. We talked about letting your losing trades stop, allowing your losing trades to run too far. Let's have stop losses. We shared with you where you should, the swing lows, how to set stop losses. Winning trades, how to let them run to completion. Wait until an exit signal goes up. Or if you set a take profit, then let it run to that take profit. We didn't talk about how to keep journals, but we have that in the course material. How to gain a lot of experience in a short period of time. What is that called? It's called simulated trading. Now, why do our methods work? The best thing about Forex Trade Secrets is that our systems can work on all currency pairs. These strategies can be implemented fast. You can get results in days, meaning within a week or two, you could actually start becoming more successful in a demo account and actually start making money in a demo account if you are patient and apply what you've learned in just a few days. You don't have to wait months. You can just a few days you can be there. Our methods are scalable, meaning you learn some principles, you can become successful. You don't have to know everything to get good results. When you know more, you'll get better results and bigger results the more you learn. But you can get results right away. Our system allows you to work less and have more fun. Enjoy life. You work between 5 and 10 hours a week, and that's usually in the beginning, the 10 hours, part of that study time, and you can get really good results. Once you know how to use the system and know how to find the setups, and you do it properly and discipline and be consistent, 5 up to maybe 10, but you could do it in 5. We have many of our good traders don't trade on Friday. Some of them don't trade on Monday. They trade Tuesday, Wednesday, and Thursday. Well, 5 hours more than covers that in 3 days a week or 4 days a week. Our strategies are repeatable. Once you know how to do it, you can repeat it day after day. And that's how we can get some good results. We have 9 strategies to choose from. You don't need to use them all the time. Find 2 or 3 that you like and that work for you, and then use those. There are multiple signals to help you find those high probability trades. We showed you a lot of different variations, adding additional indicators, and we didn't say this, but there are 5 alarm trades. That means there are 5 signals saying and suggesting that that's a high probability trade in that direction. There are multiple tools to help you manage your trades, to help you get out of the trades. We showed you some manual things. There are some automated tools also to help you know when to get out of your trades. And we have 16 hours of live trading rooms. This is where you can rub shoulders with the professional traders, those that are making a lot of pips. And this is a great place to ask questions and learn from. It's not like you buy a system and then you look at it and go over it and you never get a chance to talk to anybody again. You only can have the same videos over and over again. Well, you can talk to these traders that are doing it. You can ask me questions. You can ask Jed questions. We're in the trading rooms as well. So what we're trying to share with you is with Nth Degree, and if you add the Nth Degree Advanced, you'll be able to be more disciplined. You can become mechanical. You can be consistent. This gives you confidence to be a confident trader. So what else is there? Well, we have some other things besides just the regular course material. We have 21 Trading Lab webinars. These are answers to 21 questions that people ask us over the years. And we actually had, these webinars are 20 to 40 minutes long, and you can actually hear the answers. And we go over and over and over showing the answer to that specific question. We have acceleration coaching webinars. We actually coach people on how to get up to speed quickly. And so you have a couple of those that are recorded so you can see how to get up to speed quickly also. We have trading rooms, European and U.S. trading rooms that you can attend and trade with people, find trades, and take trades that they're taking. And we have a psychology of trading course. If that's an area that you would like to use, it's there for you, and you can use it or not. I'll get all this for $497. This is a bargain price. The information I've shared with you, we know that people are telling us that they've paid thousands of dollars for what we're charging $1,500 for. And they have paid this price, looked at it and said, well, I'm going to go look at this big expensive thing, paid the money and found out that remember I told you about Jumpstart? The very first thing we showed, they have told us we give away more information in our free strategy than they learned in the $5,000 course as far as being able to know how to trade. And here's the link. So copy this link. If you don't have a copy of the Nth Degree course, and you can pick up your Nth Degree course. What if you want the whole thing? What if you want our Nth Degree Supreme? Contact Michael. Here's his email address. It's Michael at forexstrategysecrets.com, or give him a call. And if you don't reach him on the phone, leave your name, a phone number, and or an email address or a Skype address. Leave all the information in the email address, Skype address, phone number, so forth, so he can get back with you, or keep on trying to reach him until you get him the first time. You can reach him the first time, but many times he's on the phone, so it'll take you a while. But if you want to get the whole complete thing, we're not telling the price here. Go ahead and talk to him about that. But here's the link to get it for $497. Go over once again how long it takes to get up to speed. I'm summarizing what the question was, to get up to where you can be making money and making pips on a consistent basis. The launch pad we talked about, a day. You should be able to go through that. There's about an hour, maybe 2 hours worth of videos. In a couple of days you can go through that. We don't expect you to become proficient at Launchpad. That's when we added the first indicators. Go through all the videos as fast as you can, and then pick the areas you need a little more work with and come back and watch those specific videos. Some things you will already know or you learn quickly, and other things you'll have to come back and review a little bit. Go through it as quickly as possible. You should be able to go through everything that we've shown you here in around 30 days, and we suggest that around 45 days, open a live trading account if you don't have one already. Then, when you feel comfortable, someplace up to 60 days, fund that account with a small amount of money. We want you to throw knowledge at it, not throw money at it. You can add more money later on. And then, so in 60 days, you should be able to start trading your live account. Trade small amounts so it doesn't blow your mind when you have a loss, and you don't get over confident if you have a win. Sometimes it's just as detrimental to have a big win when you don't know what you're doing is to have a loss. It just blows your mind. It throws your emotions all out of whack. So learn how to control your emotions. Take big wins. It's just part of everyday trading. Take a loss, small losses. Don't take big losses. Part of everyday trading. Manage your account. At the end of the week, you are shooting to have some positive pips. And as you go along, those pips will get larger and larger and larger. We have many people starting out at 5 or 10 pips a day is their goal. Once they do that, then they learn that, yes, I can do it. And then they raise it to maybe 5 or 10 pips higher. Many people think, okay, 30 pips is a good amount of pips per day, times 5 is 150 pips a week. That is fantastic. Let me give you a relationship as to why 150 pips a week is so much better than you might think it is. That's only 30 pips a day. That is because, over the years, I've read material, heard webinars and so forth from professional traders. They're touting and saying, oh, we make 600 pips a month. We just shared with you that we have many traders making that per week. Start out with 30 a day. Start with 10 a day. 10 a day is 50 a week. What's 50 times 4 is 200. So you're at 200 pips a month. You're almost a third of what a professional trader does. Then grow. Don't compare yourself to them, but just know what the parameters are and build your confidence and get up to speed. So that's how fast you can get up to speed and what is relationship to being successful. 150 pips a week is great. We've had people get up to 150, 200 was their goal, and they were doing just nicely, and that was really good. Then we shared them with them, and we had been sharing with them for a long time. They just didn't catch it. And finally, one day, they caught the vision. And from that time, very next week, they went from around 150 to 200 pips a week to 1,000 pips a week because they caught on to one concept. It's called CDC. Remember we talked about convergence, divergence, and congruence? That one concept turned many traders around. One in particular that just, from there they took off and haven't looked back. There have been weeks where they made over 2,500 pips in a week. Well, that's because the market's really moving. And if they average it out, they're making over 600 pips a week now because they decided they didn't want to spend 12 hours a day to make those extra few pips. They'd rather make fewer pips, work less hours. And now, how do they make the money still? They increase their lot size. You don't have to work harder to make more. As your account gets larger, you increase your lot size and keep doing the same thing you know how to do day in and day out, or whenever you sit down to trade. Put this link in and order the product. But here's the contact information for Michael. So get in touch with him, find out how to get the full package. Maybe you only need the nth degree right at this point. And nth degree advanced would be something you could incorporate later. That's okay. Whatever you get, go through it as fast and quickly as you can, and don't try and become an expert the first time through. Don't study it and study it and study it. We have traders, and we told them not to, but their personality is such that they will spend weeks on one concept. Oh, I've got that down finally. Then they go on to the next. If you get the big picture, then each individual concept comes together more clearly for you, and you'll progress faster. Go through it quickly the first time, then come back and study the areas you want to have more help with. Then you can ask questions in the trading rooms about those concepts, and that'll help you grow as a trader, grow your skills faster by having the videos that are answering the questions, live traders that answer your questions, and you're seeing how it fits with the big picture.